Hey, my name is Tucker Kraus, and welcome back to my channel, and in today's video, we are going to be talking about what I look for in uranium mining CEOs, or mining CEOs in general, and pretty much all of the top management. But I'm just going to say CEO from here on because that's simpler, and I'll probably be making a lot of reference to uranium companies, since of course, I invest in a lot of uranium companies. So let's get right into it. Alright, so I'm going to be covering 4 main criteria here, and that is experience, transparency, pay, and tenure. Alright, you can click off the video now. I told you the 4 I look for. Well, if you want to go a little bit more in depth into them, we're going to do that now. And of course, before we continue, like always, this is not financial advice, and do your own research. So the best case scenario is you have a CEO and management team who's actually built a mine before, or in the case of an explorer, gone and found a massive deposit before. Of course, that's why someone like John Borshoff of DYL is so respected, because he led one of the biggest success stories in the 2007 uranium bull market. But of course, you can't always have someone who's actually built a mine or found a massive deposit before. Everyone does have to, lead their first company. And in that case, I would look at their previous work and education experience, since usually someone isn't leading a uranium mining company fresh out of high school. So a quick and easy type of uranium company that can definitely be sketchy is one that's led by a banker with a finance degree. Ideally, you're going to want someone who's worked in the mining industry before and, has a degree in geology or some sort of engineering. And of course, you'll want to make sure those degrees are from legit universities as well, and not a bunch of no-name universities. And of course, that's not to say all bankers who get into the mining industry are bad or something like that. Of course, you have lots of royalty companies, for example, and the CFOs and stuff like that come from a finance background. But that's where you need to go look at their previous work experience, not just their education. So some questions about work experience are, has the management been a part of a company that went to zero before, or a company that totally scammed and got rich off all their shareholders while once again that stock went to zero? You probably want to avoid those management companies because chances are they're going to do that again. It's definitely much preferred that the management worked at a well-renowned mining company, especially one that was a part of the same commodity of the company they're now leading. It's much better if someone worked at a uranium mining company before if they're now leading a uranium mining company. And on top of that, I would make sure that work experience is generally in the same realm. Exploration, development, and producing are all very, very different. And so typically if you have someone leading an explorer, you want to see that they've been working at explorers before at the exploration sections of larger companies, rather than someone who previously was just leading the operations of the mine all of a sudden running an explorer. Again, not to say that this is a caveat for pretty much every criteria in this video. These aren't 100% foolproof. You will get some people who have only worked at leading a producing mine before will sometimes find great, amazing deposits. So to recap that experience section, essentially you either want someone who's, built a mine before, or someone who's at least been working at building a mine before. Or, of course, just swap that wording around if you're talking about an explorer, developer, or producer. But before we continue on, I don't make any money off YouTube, so if you want to support me, check out that Patreon link at the top of the description, since it would help me get out more videos for you guys, and you'll get things like weekly uranium stock updates and all my videos early and more. Again, if you're interested, check out that link at the top of the description. Thank you, now on with the video. Alright, now on to transparency. This section is going to be quite a bit shorter than the last, since really it's quite simple. Is the CEO out there giving interviews, and is the management making sure to put out press releases and up-to-date presentations rather than just keeping shareholders completely in the dark? Well, generally, that's going to be a good thing. You don't want a company who is leaving everyone in the complete dark with one press release a year and the front page of their website being a 3-year-old presentation. Now, of course, there is a balance to find here in that if a company is way too focused on marketing, it's going to be like, are you guys even focusing on the mining aspect? That's the type of company that's also quite sketchy. So first off, I definitely avoid a company that has a buggy, glitchy website with no recent presentations, but I'm also going to avoid that company who has their CEO doing an interview every single day. Now on to pay. This is once again a shorter section, since once again it's quite simple. The CEO of a uranium developer shouldn't be getting paid more than the CEO of Cameco. Looking at you, NexGen. Of course, there isn't really a hard and fast number you can use for how much a CEO and the management should be getting paid, but you can usually eyeball it fairly easily. If you're running a $200 million company, you probably shouldn't be getting paid $10 million a year. Alright, now finally on to tenure, and the reason I separate this from experience is that experience more so relates to what that person has done in the past, whereas tenure is more so what this person has done with the company they're currently at. Generally, I am wary of a brand new company that pops up in the middle of a bull run, since chances are they're just trying to capitalize on this hot new thing. And the other thing you want to watch for, though, is even for established companies, is their management also established that company. A CEO and management team is always going to get some good faith with me if they've rode through with that same company through good and bad times. You know, they were there with Uranium in 2007, 2011, through all the 2010s, and are still here. Since chances are, that means they're not just in it for a quick buck. Now, did I miss some things? Comment down below if there's any criteria you would add to this, and what you think about my personal criteria for vetting CEOs and their management. And so another side note, again, these criteria could always be totally wrong and make you lose out on a totally amazing company. You know, that Wall Street banker with zero mining experience who overpays himself $5 million a year to run his $200 million company. You know, maybe he will find the most amazing deposit or build the most efficient mine. It's totally possible, you just never know. And so, of course, that is why this is not financial advice. Do your own research. Thanks for watching, and I will see you next time.